I think the political landscape and consensus really shifted in the second quarter when Trump embraced crypto. The crypto community, I think, was at the end of their rope, where it was pretty clear the current administration was going to continue to wage a war on crypto via enforcement actions, and they had nothing to lose by abandoning, the Democratic Party, and they made that decision. And then I think there was a, atmosphere of lawfare that caused, Trump to decide he would be benefited to ally with the crypto community.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Michael Saylor is the chairman and founder of MicroStrategy. In the Bitcoin community, he's known as the Bitcoin Gigachad. Since 2020, he has been buying Bitcoin and putting it on the company's balance sheet.
And so that alliance formed and got progressively stronger, and I think that changed the political landscape, not just in the U.S., but it changed it in the world, actually. It changed the course of human history. I think it changed the outcome of the election. Right? I think the crypto community support actually was a material force that tipped the election, in favor of the red sweep. And I think we got a red sweep in part because of the support of the digital assets community. So I think that there were really two possible futures, two timelines in March or February of the year. And one timeline, the blue timeline, is Bitcoin motors up as the one crypto asset that's embraced as a commodity by the global community, and then everything else sits in a gray zone, right? And in a world of uncertainty. And I think the second timeline, the red timeline, is the war on crypto ends. We get a supportive administration, House and Senate. We get a digital assets framework. We get a framework. There's three things we need in a framework. We need a taxonomy. We need legitimacy, and we need proportionality. And a taxonomy means give me a physical, ethical definition of a digital commodity, a digital security, a digital token, a digital currency, an NFT, and a digital asset-backed token, an ABT. We need those things defined.
MicroStrategy chairman Michael Saylor shares how dollar-cost averaging on Bitcoin paid off for a patient investor who flipped his investment over 20-fold. Bitcoin evangelist Michael Saylor often promotes dollar-cost averaging. The enthusiast encourages investors to periodically buy Bitcoin and recommends holding the asset for at least 5 years. Dollar-cost averaging involves investing a fixed capital into an asset at a set interval, regardless of the condition of the market. It helps in reducing the impact of market volatility by spreading out purchases over time. Recently, Saylor shared a success story of a user who bought Bitcoin daily with a meager investment. Meanwhile, the vicious Bitcoin buyer has turned his little daily input into millions of dollars, lauding Bitcoin's rewarding promise. According to Saylor's disclosure, the smart money investor committed to buying $30 worth of Bitcoin daily. The user unrelentingly pursued this course for 9 years, specifically since 2016, when Bitcoin traded under $800. As of the time the news made the rounds, the user had spent $98,640 on the pioneering crypto asset. Meanwhile, his investments have paid off massively, as Bitcoin has surged from under $800 to a new all-time high of $108,000 in trades slightly below the $100,000 price mark. Interestingly, the user's Bitcoin stash is worth $2,157,090, a staggering 2,086% uptick from his total capital. Such profit trounces the return on investments from traditional assets like gold, stocks, and bonds in the same time frame. Meanwhile, Saylor stated that MicroStrategy is mirroring the ardent investor's periodic buy-ins on a larger scale. Notably, the business intelligence firm has accrued 444,262 BTC, $43.6 billion, over 4 years, with one-third of them acquired this year. MicroStrategy has introduced a new scheme that leverages debt instruments to acquire more Bitcoin. The 21/21st Bitcoin strategy has boosted its buying capacity while gaining traction among public companies like Metaplanet and Marathon Digital. Furthermore, in his latest disclosure, the MicroStrategy chairman voiced Bitcoin's life transformational qualities. He noted that holding the premier asset for 5 to 15 years promises substantial returns. Saylor encouraged enthusiasts to start dollar-cost averaging on Bitcoin, citing the user's magnanimous returns. The long game can set you free, the Bitcoin evangelist noted.
I can't tell you exactly, what happens next because I haven't seen the framework, right? And that has to be determined in a dialogue between the White House and the cabinet and the House and the Senate and the industry. But I'm optimistic, right? And now I would say my forecast for Bitcoin isn't that different. It's going to grow 29% ARR over 21 years to be a $280 trillion asset class and 13 million a coin. That's not that different. Maybe a little bit faster up front. Maybe I'm leaning more toward the base case to the bull case than I was leaning from the base case toward the bear case. So yeah, I'm a bit more optimistic. But I think the big major sea change is you can see $500 trillion of conventional assets getting tokenized to become digital assets. I think the issue is, why wouldn't half of the equity in the world become digital equity? Like, why wouldn't you expect to see Apple stock, Google, Amazon stock trading on your iPhone and your Android phone as tokenized security? And I would think that the path is open for stablecoin, that to go from $150 billion to $1 trillion to $10 trillion. I mean, I at this point, you define a digital currency, you peg it to the dollar equivalents. Yeah, there ought to be a regulatory environment where a company or a bank, especially in the U.S., can issue a U.S. dollar-backed stablecoin. I think there's $10 trillion of demand for that. I think that we're going to go from $100 billion to a $10 trillion industry in stablecoins. We're just waiting for the framework for the digital currency. And as you know, I don't think of Bitcoin as digital currency. I think Bitcoin is digital capital. Currency is the short-term medium of exchange pegged to the fiat currency. Capital is the long-term store of value competing with real estate and gold and high-quality equity and your art, that you're going to give to your grandchildren. I think those two are clear. I think, though, for this industry to thrive, the government's got to give you the minimal of rules and then get out of the way. And what happens next is, I think, millions and millions of digital assets will be created. I think that'll bring the exchanges to life. That'll create a renaissance in the wallets. That'll create a renaissance in all the applications. Don't get me wrong. I'm sure lots of people will do stupid things and they'll crash and burn. 99% of the companies that start fail, and 99% of the, whatever, public companies have a hard time competing against the Magnificent Seven. Just like 99% of businesses eventually get shut down. But you know what? What percentage of the people die over 100 years? Like 99%? It's like we shouldn't stop people from living just because over 100-year time frame, there's a high mortality rate for whatever. So I would say what's really interesting here is we jolted from a very regressive, a very depressing timeline to a very progressive, very inspirational, pro-technology, pro-prosperity timeline. And it all happened in 2024.
Bitcoin became the talk of the town in mid-December, reaching a new all-time price of over $108,000. However, the Federal Reserve's latest FOMC meeting, and more specifically, Jerome Powell's comments, changed the scene in the crypto market. While the chairman of America's central bank announced another rate cut of 0.25%, he hinted that concerns of rising inflation mean that they might not cut rates going forward in 2025. Powell added that the Fed is not allowed to hold BTC, casting doubt on Trump's proposed plan to establish a strategic BTC reserve. The disclosure occurred on December 18, with the primary cryptocurrency experiencing enhanced volatility in the following week. The price hovered between $92,600 to almost $100,000. In the past several hours, BTC fell by 2% to its current $95,600, and one important factor indicates that the plunge could intensify in the near future. The popular X user Ali Martinez revealed that over 33,000 BTC, valued at approximately $3.2 billion, have been sent to exchanges in the last 7 days. This move suggests that investors may be preparing to offload their holdings. Large sell-offs would result in increased circulating supply, which, combined with non-rising demand, could negatively impact the BTC price. Martinez previously outlined $97,300 as a critical support zone for the asset due to the numerous investors who had bought roughly 1.5 million BTC there. As mentioned earlier, though, the price plunged below that level. Contrary to the aforementioned assumption, many analysts remain optimistic that the asset's valuation could soon rally beyond $100,000 again. Ex-user Captain Fabic envisioned a rise to around $110,000 by the end of the year, while CryptoRover believes BTC is about to go parabolic next year. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.